Hi guys, welcome back. You may have heard about the Teladoc and Livongo merger in the news. I'm excited about this. I have to confess, I actually do own stock in each of them. I was excited when I heard the news. Investors weren't quite as excited. The share price dropped around 16% for Livongo and around 22% for Teladoc. We're going to talk a little bit about these two companies, about their merger, and how I think it's a good idea. Livongo, a funny name. I think it has to do with living and being on the go. What is Livongo? Well, Livongo is an applied health sciences company. Their mission statement, or on their website at least, it says empowering people with chronic conditions to live better and healthier lives. That's what their mission is, and the way they go about doing it is through this concept of applied health sciences. What they members, data might be related to diabetes or high blood pressure or weight. And the way they go about collecting that data is either, suppose you're a diabetic, you have a monitor that's attached to your cellular device, and it can connect remotely to the Livongo folks, where they can collect all of your diabetes data, and then they interpret that, or even to groups, and then they try to learn from the data that they collect to make things better. Same thing could apply with blood pressure. You would have a monitor, a Livongo monitor, attached to your cellular device, and they collect all that blood pressure information. Some things about Livongo. One, you won't actually pay a dime for this one. You can see here it says $0 per month is what you from either employers or health plans or health insurance companies. So the bad thing is, if your employer or your health plan or your health insurance company doesn't participate with Livongo, then you are not able to join, at least not currently. Some things about Livongo that I find interesting and exciting in terms of their potential growth. They say that there are 147 million people in the United States with a chronic condition. Of those, 31.4 million of them are diabetic, and 39.6 million of them have hypertension. You can see that if a member is, or if the employer or a health plan is paying $900 per year for a person, they have a potential for $28.2 billion per year just from diabetes in revenue, and $18.5 billion a year just from hypertension in revenue. So combined $46.7 billion in revenue for Livongo from just these two chronic conditions. Some other exciting things about Livongo. You can see that their member growth is growing significantly. Here they were back in 2018 with only 69,000 members, and in the second quarter of 2020 they're up to 410,000 members. Year over year, that's 113% growth. And when you look at their revenue, you can see that the second quarter last year they were at $41 million of revenue, and the second quarter this year $92 million of revenue, so 125% growth. This is a company that's growing in leaps and bounds. Okay, now let's talk about Teladoc. You may have heard of Teladoc. It's become quite popular now with the pandemic going on and people not wanting to leave their home, or not wanting to go to a medical facility where they're going to be surrounded by other people who may have illnesses that they don't want to acquire. Teladoc comes into play particularly well in this instance. So what is Teladoc? It is a remote healthcare company. There are some chronic illnesses that simply just don't require, or not even chronic illnesses, there are some acute and chronic illnesses that simply don't require a in-person visit to a medical provider. Teladoc, the way that it works, you set up an account. It works over an app. So over an app you will connect to a medical specialist. This comes in particularly well with dermatology, where you might need to show a skin condition over a remote camera. That certainly, you could see how that could fit well. Mental health care fits very well into this paradigm of telemedicine as well. And there may be other things as well, such as sinusitis, the flu, and you could probably think of several other illnesses that might apply well to telemedicine. What else about Teladoc? Well, you can see that they say they're available 24/7. They operate in the United States and in multiple other countries outside of the United States. You can see here things that they can help you with. Mental health, dermatology, we talked about. Nutrition, if you need nutritional advice. Medical experts, if you're just looking for a second opinion, perhaps. And if you want a confidential STD test, they can help you with that as well. What about the business end of the company? This is a very informative graph from their recent earnings report. This is as of June 30th, 2020, and it compares the same time period in 2019 to 2020. Things to note is that this revenue is in thousands of dollars. So when you see this 152,021, you're going to times that by 1,000. So this is how much they collected in subscription revenue fees year over year. You can see it's not quite double, but getting close, so 78% growth. This is their revenue from paid visits. You can see that that's 159% growth, paid visits in the United States. And then when you look at their year-over-year total revenue, you can see it's 85% growth for the quarter ending second quarter of 2020 versus 2019. So you can see by this graph or table that Teladoc is growing significantly, just like Livongo is also growing significantly. So let's talk now about the merger itself. The merger was announced just a week ago. Some considerations for these two companies coming together. The deal was valued at $18.5 billion. That was just based on the share price as of August 4th, the closing share price as of August 4th. So at that time, Livongo shares were going to be worth $158.98, and the way that the deal would go down would be that Livongo shareholders will get 0.592 of a Teladoc share plus $11.33 in cash for each Livongo share that they have. So when the merger finally closes, which is expected to be in the fourth quarter of this year, Teladoc shareholders will own 58% of the company, and Livongo shareholders will own 42% of the company. The company will be called Teladoc Health, so that Livongo name will go away. What makes this a potential good combination for these two companies to come together? Well, they did announce in an interview that I saw that they realized that they were either going to be competing with each other or they could combine and synergize in their two business specialties. So this merger will bring together two companies that will complement each other. The way I see this happening is you have an appointment over Teladoc with your provider for your diabetes or your hypertension, and that provider now will have instant access to all of your data collected over that monitor that we talked about earlier. In fact, that data could potentially be reviewed even before you have your appointment, and so your provider will be up to date on just exactly how well you're doing at managing either of these two conditions or any other condition that you're trying to manage, such as weight management, which is another thing that Livongo does. That is a game changer in my opinion. Healthcare, I think, more and more is going to be data-driven. So data collected from diabetes, hypertension, or weight management and behavioral health are things that can currently be done with this merger. You can see here are some areas where they may be able to concentrate in the future. CHF, which stands for congestive heart failure, chronic kidney disease, musculoskeletal conditions, or even COPD. Again, a potential game changer and paradigm shift in the way that healthcare can occur based on how these two companies come together. So what are my plans with these two companies? Well, I plan to stay in each of them, and as the prices have come down, I plan to invest even more into each of them.